we're going to do just a very quick introduction to the Enterprise Ethereum Alliance so that we can get some of the baselining done. And some of the members of this panel were with me on Friday night when we did a similar presentation. There's way too much on this screen, but essentially the mission of the Alliance was that if you look at what's been going on in the blockchain space, when we try to move blockchain technologies, in this case specifically Ethereum, into an enterprise context, there are a lot of facets of the technology that you don't need. An example is in the public environment, you need mining. In a private environment, you can make an argument that you don't need mining, or you might need a different type of consensus. So there's a lot of modifications that make sense in a private permission context that are sort of things that are what I would say is that in the public context causing some of the current scale challenges. So that is sort of the foundational basis. If you look at the organizations that are involved, each of these organizations was, I'm just trying to move forward on the presentation here. Sorry. Go, move. Oh, sorry, it's only 2 slides. So what's happening is enterprises, like those that are represented here, have all done similar work to take Ethereum public into a Ethereum permissioned network. So the thought process was, one, we want to stay close to the public implementation in terms of specifications, but two, we want to make sure that in a private context for Ethereum, that there's not 15 different variants and that the same thing happened in the early days of Unix, where there's, basically you get incompatibility essentially in enterprises. So the idea is to come together, allow us not to have to duplicate work in an enterprise context, and then secondly, get to reference specifications so that the work that actually gets done is compatible across enterprises. So with that, I'll ask the panel to do a very brief introduction so that we can start taking Q&A.
Hi, can everyone hear me? Yep. Great. Sandra Rowe, CME Group. I head up our digitization efforts. The company itself is made up of a number of exchanges. I'll describe a little bit more in the afternoon when I speak. But we have joined Enterprise Ethereum Alliance at the board level. I drew the short end of the stick, so I'm the treasurer. But we're pretty excited to be a part of this new enterprise. And we'll talk a bit in detail about why, and I'll certainly describe from our perspective why we've joined this initiative.
Hi, Joseph Lubin, co-founder of Ethereum, founder Consensus. Consensus is one of the blockchain startup companies. It's really an enterprise-led organization. We're one of the blockchain startup companies that are part of it. We launched with 28 member companies, bunch of banks, BNY Mellon, CME Group, entities like British Petroleum, and 5, 6, 7 major banks, and we have a wait list of 200 organizations waiting to be onboarded over the next 2 to 3 months.
My name is Jared Harmon-Gdanski. I'm the Deputy Global Head of Emerging Business and Technology for BNY Mellon, co-chair of the Governance Committee, so I was very excited to see governance was on one of the slides. I felt it should take a larger role. We're a founding member of the EA, and members of my group, my boss, Alex Batlin, sits on the board, so I dodged that bullet, and he also chairs the Technical Steering Committee, so we've been pretty involved with the EA from the beginning and very supportive of its efforts.
Hi, I'm Victor Wong. I'm CEO and founder of BlockApps. BlockApps was incubated by Consensus. We were the first blockchain as a service company, which we launched with Microsoft about 1.5 years ago. And we were one of the leading providers of Ethereum for enterprises. So last year, we had over 200 companies and 1,000 projects built on our platform. And this includes projects like financial ones that you've heard about, but non-financial ones, especially in the oil and gas sector. We're one of the founding members of the Enterprise Ethereum Alliance, and I am currently chairing the benchmarking group.
And my name is York Rhodes from Microsoft, and we're also a founding member of the Enterprise Ethereum Alliance. So with that, I think we'll take some quick questions. Yes, sir.
Yeah, it would all be over. Ethereum is in the process of abstracting various functionalities in the architecture. One of those is the signature scheme. So in the next version, the next release of Ethereum, you'll be able to designate which signature schemes you attach to the validation of different transactions. There is one signature scheme called Lamport signatures, which is quantum resistant. So there are a couple known algorithms that could be a problem, Grover's and forgetting the other one. It is resistant to those, and so while it is true that if quantum computers come online at some point soon in a significant way, old encrypted information would be vulnerable. You'll be able to ideally stay on top of that and build your business-focused systems on top of Ethereum such that they are well resistant to any emerging technology.
So just a quick comment on that, which is you've kind of touched on something that's kind of a big topic, especially in the financial industry, which is, well, is encryption enough to ensure confidentiality and privacy of data? I'd argue no. We have financial assets that go on for decades, and even just with Moore's laws, improvements in cryptography, you can potentially have information that you'll be able to crack that's still relevant to the market. Sorry.
Just put the mic closer to you.
Hello? Sorry. Oh, Jesus. Like there are regulations around data locality and where data can be stored. And some people will say, well, it's encrypted, it doesn't matter if you have it. And this is actually a pretty open-ended question that's being discussed right now in industry. So thank you.
So I guess two questions are, one is volatility of cryptocurrencies an issue, one? And then secondly, is it an issue for enterprise?
Oh, sure. So probably three answers there. One, when you build your business system on top of a private permission version of Ethereum, contrary to actually some of our friends at IBM thought this early on, you don't need that Ether token in order to operate the system. It's incredibly valuable to have that Ether token just for bookkeeping of shared computational resources, but absolutely not necessary, and so you're not at all subject to the vicissitudes. With respect to the public blockchain, while Bitcoin and Ether and other cryptocurrencies are so small still in total monetary base, they are going to remain volatile. As they grow to perhaps trillions of dollars, it'll be much harder to push them around, just as there is manipulation in current currency markets, but it's much harder to move price. That said, we need price-stable tokens. In order to get there, there will be many different tokens used for different purposes. We at Consensus have a project called Stable for issuing price-stable tokens, and there are many other groups around the world that are experimenting with different approaches, whether it's based on assets in a bank account or tracking a basket of commodities using some sort of mechanism. The problem's being worked on, and there will be some very satisfying solutions over the next year.
Sandra?
I'll add a little bit to this. In the context of enterprise Ethereum, I think what we will see is, as Joe mentioned, you can build on top without a token or Ether. But I think what we will see is the advent of tokens being used for very specific purposes. So is the token going to be created to basically be a rail mechanism that moves something from point A to point B in a given use case? Or does that token also take on the attribute of having value, and therefore people want to trade it as if it's an investment or a speculative thing? I think it remains to be seen. A lot of these tokens are taking very different forms. They actually have several attributes, whether it's a technical attribute, a purely investment monetary attribute, or a number of other things that we haven't even come up with yet. So anything that has value that can be tokenized can take many different forms. But from a pure EEA standpoint, the cryptocurrency that you've mentioned are not really relevant here.
Thank you. Yes.
How heavily reliant is the enterprise Ethereum on proof of stake, like a successful proof of stake implementation of Casper, for scalability in the future?
Yeah, well, just so the question is around Casper and proof of stake, which are public Ethereum concepts, and versus an enterprise Ethereum, construct, and so. I'll let probably one of you answer this question, but in terms of the reasons enterprise Ethereum exists as a thing is because we have different concepts of how we think about consensus in an enterprise, and those don't require mining, so they don't require crypto tokens necessarily, unless you choose to do an implementation like that, and they allow you to have like different types of pluggable consensus. And then, I guess to your point about Casper, I'll let someone else answer that.
Yeah, so Ether is necessary in a public permissionless blockchain to pay for computational steps and storage operations. It's not necessary in a strong governance context. Strong consensus algorithms are necessary in that wild west of a public blockchain context. And once you have strong governance, you can relax assumptions and make all sorts of optimizations. So you can move away from the strong proof of work or the strong proof of stake to something that is better fit for purpose. We have two thrusts at the protocol level, two major thrusts at the protocol level, a tactical thrust and a strategic thrust. The strategic thrust involves the long-term holy grail of modularizing everything. That strategic thrust interacts with the tactical thrust by modularizing initially consensus. And so we've got a lot of projects that can plug and play different consensus algorithms.
Just to kind of add a little bit to that. So one of the first things we had to do at Block Apps was to create a Ethereum client with pluggable consensus. So for people who are not familiar with the technical underpinnings of blockchain, what a consensus algorithm does is allow all the nodes to agree what has happened. And basically, why do you need pluggable consensus? Because different business cases they have slightly different trust and security requirements. So why the public Ethereum, you can think of a consensus mechanism as a voting mechanism. So there are two things that are controlled by the consensus mechanism. You have, what do you have to do to get the right to vote? Now, in a public context, you have to make sure, you don't know who the participants are, so you have to make sure that they have some skin in the game. And the way you do that is through what we call mining, where they waste electricity. They waste money in the form of electricity in order to get the right to vote. Then the second aspect you have is how many people have to vote to agree. Now, in the public network, you need majority. You need 51% to agree. But in private networks, you often don't need that. Like, for example, if a buyer and seller agree to a transaction, that's good enough, and that will be written to the blockchain. So by allowing pluggable consensus, you can build in a lot more efficiencies and run blockchains that are much faster than anything you see on the public network.
Yeah, and just to the point, consensus algorithm research has been going on for like 20 years. I mean, so like other technologies that are coming together to form public blockchain and permission blockchain, things are actually well studied, and so back to the enterprise context, governance actually in an enterprise is equally important as consensus.
Are there any stats on how often that consensus voting on the public chain
Is closed or close?
most of the voting on that usually everybody agrees, or most everybody agrees?
Yeah, so voting is a term that we use that is actually sort of a misnomer. What it actually is, the consensus formation algorithm designates which entity can be the leader in forming consensus. And once a leader is designated, all the other entities are economically incentivized to fall in behind that leader. So proof of work or proof of stake are just algorithms designed to probabilistically select a leader. So there is no actual vote. No. And the one thing that's closer or somewhat related to answering your question is that there can be multiple leaders elected simultaneously or nearly simultaneously, and those sorts of situations resolve themselves as the economics line up more strongly in one direction or another, and everybody falls in behind one of those leaders and the other branches are orphaned.
In an enterprise context, you could actually define what the consensus algorithm specifically is and come up with something completely proprietary to your business that has nothing to do with 51%. So the question is, with all the different variants of blockchain technology in the world, how does that look related to other technologies that we've seen have sort of gone in different directions, and therefore is interoperability, whether it's an interoperability protocol or anything, something that's sort of being worked on either in public or private chains? And we can just answer that question from a high-level perspective. If you look at any other technologies in history, whether it's email or SMS messaging, we had the same problem, right? Or instant messaging, for example, right? Where technologies did not interoperate and there were islands of technologies. And as some of those technologies became big enough islands, it became interesting then to have essentially interledger protocols, right? And in fact, there are some protocols in the public today called interledger protocols. So I think we'll see that work happen over time both in a private and a public context. This gentleman up here on the left was waiting. So just to repeat the question, it's a public Ethereum question about smart contracts and how do you pay for the execution of smart contracts? Oh, and and how do you actually get stabilization of price for a business logic? And if you can answer that question quickly, it would be good, because it's not an enterprise question.
Yeah, for the EA answer is it's not relevant. We're not pricing contracts. It'll be some separate business, right? If CME wants to create contracts or BNY wants to make contracts, and someone wants to purchase them from us, then it'll just be a software licensing agreement or something along those lines.
I think the public answer is probably too long for this forum.
Well, for the short answer is, for public blockchain, there is or will be a market, and that the growth in the price of Ether won't affect the cost of running smart contracts.
Yeah, so the question is, does the role of a specific thing called an oracle, is it easier to interoperate that or connect it to a ledger in an enterprise context? The answer is not necessarily. The value, one of the value propositions associated with blockchain is that it creates this really interesting trust envelope, which is because of the qualities of blockchain. So the key glue and challenge, actually, and this is where Microsoft is spending quite a bit of time, and you can actually read up on this, it's called cryptlets, is how do you actually extend that trust envelope off the chain so that you can get scalable processing in an Oracle context. And so we are working on that. It doesn't mean it's easier. It's still a challenge because of the qualities of blockchain.
I think that it does, my personal opinion, I think it does make it easier because, underpinning enterprise agreements are legal agreements enforced either through the courts or, either civilly or criminally. So, we're already dependent on data feeds for people right now, right? Bloomberg, Thomson Reuters, people like that. So I think that because there's already this kind of legal underpinning in these legal agreements, that it will be a slightly easier conversation than it is for the public permissionless chain where you actually don't know who you can trust. And actually, even in an enterprise environment, you can do interesting things where you can have 3 different data feeds and you take an average of a value from them, and there's different agreements, so you can say, oh, if one of them's just kind of making things up, you do the best of 3 or whatever. So I do think it makes it easier.
Yeah, it's a valid point, Jared. I mean, you can create business logic around validating an oracle much more easily.
I think actually the more interesting part about whether introducing oracles into an enterprise blockchain-based environment will be actually around data integrity. So it's not about the fact that you've got oracles. We've got Bloomberg, Reuters, as you've mentioned, tons of other data providers who provide the data, but actually, can you improve the quality of the data coming in? Because as we all know, if the data is, rubbish coming in, then it just doesn't matter because it's crap. I'm going to get in trouble with Tyler, sorry. But the question is can we actually figure out a way to, as that data is coming in, to verify or validate the quality of that data? To me, if we can have that improvement, all the computations that we do, all the analytics that we do on that raw data could be significantly improved.
There was a question back here also. Yes.
So I'm going to quickly plug.
So just let me repeat the question.
Oh,
is there a role for central banks in terms of a digital currency, and have we had those discussions?
So I'll plug a project that BNY is involved with called Utility Settlement Coin, and it's looking for ways of digitizing fiat currency. You can Google it and read up about it. It's a very interesting legal regulatory question and monetary policy question, right? Once you digitize fiat currency, you change kind of the levers that central banks and regulators can use to control the economy, right? Because now you really there's like commercial bank money, and someone like Sandra, who knows a lot more about this sort of stuff probably than I do, because I know very little, can maybe give you more depth. But there's actually some really significant macroeconomic policy pieces that underpin the issuance of digital currency by a central bank. So it's complicated.
Yeah, we've had 10 or more ongoing conversations with central banks or monetary authorities around the world. There is one nation state that appears to be ahead of the others in terms of genuinely considering it. But it's these entities issue different forms of money, and this would just be a different form of the same thing.
Yeah, and I just came back from Asia where I talked to a couple central banks over there. There is strong interest both in sort of digitizing fiat currencies, but also improving the ability for regulators to actually have a view into different systems. So this isn't just about digital currency, it's also about trade finance, it's also about land registries. All these elements are very manual intensive processes, and it's difficult for regulators to actually regulate the systems that they see.
There was another question, yes, right in front of it.
As we talk about adoption of as they approach you, what sort of strategies would you kind of recommend or practice to engage
So the question is, from an enterprise adoption perspective, how do we actually help with that onboarding knowledge process, I assume? Yeah.
Well, you're stealing. Come see my talk at 4:30. So I'll talk about that from the Block App's point of view. From EEA point of view, I think what's really important is that one of the things we've heard over and over from all the companies we work with is they don't want to be locked into one vendor on the protocol level. Jared has some strong feelings about this. So, one of the things that we've seen is we made a lot of changes to the underlying Ethereum protocol to make it work in these permission contexts. And we're donating them back to the EEA because we want to grow the entire ecosystem versus just having, us having our implementation and other groups having their implementations.
And I would say you want to run business analysis sessions in parallel to your technology team looking at the technology. I mentioned this earlier. I think most people in the last year who've looked at it have gotten comfortable that they understand the technology, the sort of the underlying mechanisms of the technology, whether it's permissioned or public, and that businesses, from a business analysis and opportunity perspective, really should be looking at the opportunities.
Yeah, so education at the executive, analyst, and developer level, if developers are relevant in an organization, ideation of use cases, a POC or two to enable all the different stakeholders to wrap their heads around the details of the technology, and then pilot to production. We do all of the above.
So I guess a couple comments from the enterprise point of view. Enterprises are very wary of risk, especially those that run core infrastructure. So I need to know, before I can even go to any people to get approvals for this, I need to know that there is no vendor lock-in risk, okay? If a 10-person startup comes to me and says, oh, we want to do a project with you, okay, that's great. What if you go out of business? What happens if there's key man risk, right? What happens if you get hit by a bus type of thing? So having kind of a uniform protocol and a large amount of standardization where there are multiple vendors will lower the barrier to entry for adoption. That's number one. And number two is you need to make sure that you're solving the right problem. BNY Mellon, we play with everyone. We talk to IBM, we talk to R3. We're obviously interested in capturing the developer community that's in EEA, in the Ethereum development community. So, make sure, just kind of general advice is that you're actually solving a problem that's unique. And people come up to us all the time and say, I got this amazing blockchain idea. I'm like, okay, what is it? Like, it's my own thing. I'm like, not interested. We don't want to pay for HTTP. We don't want people fighting over different protocols. We want people fighting over applications that add value to us. And so that's why I think you see a large push from the enterprises to try and get standardization on protocols.
Okay, so we're going to have to wrap up. So we'll take any other questions outside. Just as a point of reference, two things. One, Enterprise Ethereum Alliance website is entethalliance.org, so you can go there for more information. Secondly, the demonstration that was launched on February 28th when we launched the Alliance is actually up and available on Azure, so you can actually run that demonstration. Thank you very much for your time.
Thank you.